Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're exploring a momentum and trend strategy called Qqe Trailing Band Cross. It's built on the quantitative-qualitative estimation method, which wraps a self-adjusting trailing band around a smooth version of the classic relative strength index. By the end of this video, you'll understand how it reads momentum, how it decides to enter long or short, and how it manages risk on every position. Let's get started. And remember, everything here is educational information only. Let's start with the big picture. Qqe Trailing Band Cross is a momentum and trend following strategy. At its heart sits the quantitative-qualitative estimation indicator, or QqE for short. If you've ever used a supertrend indicator on price, the idea here is similar, but with a twist. Instead of placing a trailing band around price, QqE places it around a smooth version of the relative strength index. The strategy first calculates a standard Wilder relative strength index over the closing prices. It then smooths that RSI with a short exponential moving average to remove the jitter. Around this smooth line, it builds a trailing band whose width is derived from the RSI's own volatility, essentially an average true range calculated on the RSI itself, rather than on price. Because the band breathes with each instrument's momentum, it absorbs the small wiggles that make a raw RSI whipsaw, while still turning promptly when momentum genuinely shifts. When the smoothed RSI decisively crosses this trailing band, the strategy interprets it as a change of momentum regime, a flip from a down phase to an up phase, or the reverse. To avoid acting on weak, low-conviction flips that happen while momentum hovers around neutral, it adds a midline filter. The smoothed RSI must be clearly above or below the 50 level before a signal counts. So who might study a strategy like this? It's designed for traders interested in systematic, rules-based momentum entries on a single time frame, with clearly defined risk. It works on whatever chart time frame you attach it to, and it manages every position with an automatic stop loss and take profit based on the average true range. Keep in mind, this is an educational breakdown, not a recommendation and not financial advice. Now let's walk through the exact logic, step by step. The expert advisor works on completed candles only. It waits for each bar to close before doing anything, which keeps its decisions stable and repeatable rather than reacting to every flickering tick. On each new bar, the strategy rebuilds its QqE state. First, it computes the Wilder relative strength index over the chosen period, 14 by default. Then it smooths that value with an exponential moving average, using the smoothing factor of 5. This gives the smoothed RSI line. Next, it measures how much that smooth line moved from the previous bar, the absolute change, and smooths that twice more to produce a self-adjusting band half width. That half width is multiplied by the QqeFactor, whose classic default is 4.236. From here, the strategy maintains two trailing bands around the smoothed RSI, a lower band in an up phase and an upper band in a down phase. Each band only ratchets in the direction of the trend, never against it, just like a supertrend. The regime flips up when the smoothed RSI crosses decisively above the prior upper band, and it flips down when the smoothed RSI crosses below the prior lower band. A flip on its own is not enough. The strategy adds a midline confirmation. For a long, the smoothed RSI must be above 50 plus the midline threshold, which defaults to 2, so above 52. For a short, it must be below 50 minus that threshold, so below 48. This keeps entries on the momentum-confirming side of neutral and trims the noisy flips that occur while the RSI drifts around 50. When both conditions line up and no position is already open under the strategy's magic number, it enters. For a long, it buys at the ask price. For a short, it sells at the bid. Risk is handled with the average true range. The stop loss is placed at 2 times the ATR away from entry and the take profit at 3 times the ATR. That gives a reward-to-risk ratio of 1.5 to 1 on every trade. Only one position runs at a time, keeping exposure simple and controlled. Let's look at the actual MQL5 code that runs inside MetaTrader 5. At the top are the input parameters, the dials you can adjust in the strategy tester. RSI period sets the RSI length, and note that the band's internal smoothing period is derived from it, at 2 times the period minus 1. SmoothFactor controls the exponential smoothing of the RSI. QqeFactor scales the bandwidth, defaulting to the classic 4.236. Mid-threshold is the distance from 50 the smoothed RSI must clear. Then ATR period, ATR-SL multiple, and ATR-TP multiple govern the average true range stop and target, while lots and magic control position size and identity. Below the inputs are the two signal lines. The variable long OK is true when the QQE trend has just flipped up and the smoothed RSI reads above 50 plus mid-threshold. The variable short OK is true when the trend has just flipped down and the smoothed RSI reads below 50 minus mid-threshold. These are perfectly symmetric. The long and short sides mirror each other. On the buy side, the code reads the current ask price. It places the stop loss below entry at the ask minus ATR-SL multiple times ATR and the take profit above entry at the ask plus ATR-TP multiple times ATR. Then it calls trade.buy with the fixed lot size and those levels. The sell side mirrors it exactly. It reads the bid price, places the stop loss above entry at the bid plus ATR-SL multiple times ATR, and the take profit below entry at the bid minus ATR-TP multiple times ATR. Then it calls trade.sell. Each order carries a comment tag so you can identify it in your history. That's the entire decision, cleanly expressed in a handful of lines. Let's bring it all together on this illustration. On the lower panel, you can see the heart of the strategy, the smoothed RSI in gold, and its self-adjusting Qqe trailing band in blue. The dashed line in the middle marks the 50 level, the momentum boundary between an up phase and a down phase. Just above it sits the long gate at 52, and just below it the short gate at 48. Watch how the gold line and the blue band interact as the candles unfold above. On the far left, the market is quiet and slightly heavy. Price drifts sideways and then dips, and in the panel below, the gold smoothed RSI line is sitting under its blue band, down near the low 40s. This is a down phase. Momentum is soft, and the strategy stays patient, waiting on the sidelines. Notice it isn't chasing anything here. Then momentum starts to build. On the third candle, price pushes up firmly off the dip, and in the panel the gold line climbs sharply and crosses up through the blue band. That crossing is the QQE flip to an up phase. But the strategy needs one more confirmation. The smoothed RSI has to be above the long gate at 52. It clears that level right as it crosses, so the long condition is satisfied and the buy entry marker appears. This is the moment the two rules agree. A fresh upward flip and momentum confirmed above the midline. From there, price does what the entry anticipated. The next candles print higher highs and higher closes, a clean, steady advance. The gold line keeps riding above its blue band, which ratchets upward beneath it, confirming the up phase is intact. Price runs up toward the take profit target, set 3 average true range multiples above the entry. When it reaches that level, the take profit marker closes the long. Because the stop was 2 ATR below entry and the target 3 ATR above, this move follows the strategy's 1.5 to 1 reward to risk plan. Now watch the character of the market change. After that peak, price stalls and rolls over. On the 8th candle, it drops firmly, and in the panel the gold smoothed RSI line breaks sharply down through the blue band. That's the QQE flip to a down phase. Again, the strategy waits for its midline confirmation. The smoothed RSI must be below the short gate at 48. It slides well under that level as it crosses, so the short condition is met and the sell entry marker appears. The trade then follows momentum lower. Each of the next candles carves a fresh low with weak, downward bodies, and the gold line stays pinned beneath its blue band, confirming the down phase. Price presses down toward the short take profit target, again placed 3 ATR from entry, while the protective stop sits 2 ATR on the other side. When price reaches the target, the take profit marker closes the short. Notice the pattern across both trades. The strategy never acts on the band cross alone. It waits for the smoothed RSI to also clear the midline gate, above 52 for longs, below 48 for shorts, so it only commits when momentum and direction genuinely agree. And every position, long or short, carries a predefined stop and target from the moment it opens. Of course, not every signal plays out this cleanly. In real markets, price can cross the band and then reverse, And the stop loss is there precisely because losses are a normal part of any strategy. That brings us to the end of our breakdown of Qqe Trailing Band Cross. We've covered how the strategy smooths the relative strength index, wraps it in a self-adjusting trailing band, and uses a decisive band cross together with a 50-line midline gate to signal both long and short entries, all managed with average true range stops and targets. Remember, everything in this video is educational information only, and nothing here is financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling me which strategy you'd like to see next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.